Alright, hello and welcome everyone to the Kez Invests YouTube channel, where we're going to be focusing on finance and specifically long-term stock investing, mainly in the US and UK markets, and I'll give my take on the latest news and price volatility in various sectors. So, without further ado, let's get into it. So, moving into my portfolio, we've first of all got Apple, so I've got zero point 0.9 shares of it. And the current price is $261.69, and I am up 8.55%. Now I am actually waiting to add more to Apple. My current target price, based on discounted cash flow, is $223 at a 8.2% required rate of return. So I'm just going to wait and hopefully be able to add to that position, but we will see. Then we've got Bank of America. Now I can't actually assign a value or a price I want to pay for Bank of America exactly, but I am using the Graham metric, so the Graham number, which is currently at around about $33. But I actually do want to see Bank of America in the kind of sub $20 price range, and it's currently at $21.34 as of the close yesterday. But regardless, I'm up 3.46%, which is nice. Then Berkshire Hathaway, so this is obviously Warren Buffett's company. I'm currently up 2.54%. Again, I would love to add to this position, but I would like to see it in the kind of 170s range. Recent highs, though, in February were $220, so it's not looking too bad at the moment if you did want to add. Then we've got Greencoat UK Wind. So the current share price is £1.37, or nearly £1.38 there. This is like an infrastructure trust, so they don't actually have any employees. So again, it's difficult to assign a value to them based on discounted cash flow, as I think they're missing a general capital expenditure number, which I could then use. But regardless, I'm up 11.41%, so I'm pretty happy with that. Then moving on, we've got Greggs. Greggs is a business I really like. So they're based in Newcastle in the UK, and they sell sort of pasties, sausage rolls, and that sort of thing. But they're using technology really cleverly to appeal to younger audiences and to more people through the delivery services like Deliveroo, etc. So I just am very bullish on them, and their core numbers are all great. They've got a return on invested capital of 36%, which is fantastic. And I think they've got an ROCE of 21% currently, and it was 27%. So obviously I'd like to see it increasing, but with the current climate, it's hard to see that happening. But I'm up 13.89%, which is nice. Then, one of my few reds is the iShares Core FTSE 100 ETF. So it's just an index fund. So I'm currently down 1.33%, but that's fine. Especially considering last week I think I was down 10% or so that's nice. Then we've got UK properties, so it's just a UK property index. Currently up 2.57%, which is nice. One thing you've got to watch out for on that one is the high expense fees. So they are 0.4% compared to most ETFs. So for example, the Core FTSE 100, which is 0.07. Then we come on to Nike. Now I really like Nike. I've got lots of Nike products, and their ROIC, is 48%. I want to say, which is very high, and especially compared to the industry average. I think Adidas is about 25%. So I'm just very bullish on them. But again, I think the price is currently a bit too high, so I'm going to wait to add some more. Then we've got RDSB, so Royal Dutch Shell Class B shares. Currently I'm up 25.76% on those. I've actually got some more in a different broker account, but we won't go into that. RDSB's profitability is linked mainly to commodity prices, so the price of oil. So as that shoots up and down, generally the share price of RDSB and other oil conglomerates or big companies sort of follows that as well. Then my final two shares we've got are the FTSE, so the Vanguard FTSE Emerging Markets ETF. So I've got half a share of that. So that is markets including China, Brazil, and I think Russia's in there as well. And I'm currently up 6.58% on that, which is nice. And finally, we've got my Vanguard S&P 500 ETF. So I've nearly got 5 shares of that. And I'm currently up 0.09%, which is nice because I've been in the red for that for what seems like forever. So overall, we're up £62.35. And as you can see, this is kind of like an overview of my main portfolio here. So moving into some news now, unfortunately we've got to talk about Boris Johnson, so the UK Prime Minister, and his condition currently. So he's currently in intensive care with coronavirus, and various world leaders have sent their messages of support, including President Macron and other European leaders, as well as Trump. So I'll just play this clip here.
I want to express our nation's well wishes to Prime Minister Boris Johnson as he wages his own personal fight with the virus. All Americans are praying for him. He's a friend of mine. He's a great gentleman and a great leader. And he's, as you know, he was brought to the hospital today. But I'm hopeful and sure that he's going to be fine. He's a strong man, strong person.
Hopefully Boris will be okay. Unfortunately, he was going around to various different hospitals and shaking hands with coronavirus patients, and we all know now how contagious coronavirus is. So unfortunately, he did get it, and the Health Secretary, Matt Hancock, actually did get it as well, but he recovered fairly swiftly. So hopefully Boris can do the same in the next few days. That'll be positive for the UK. So moving into some other news here, we've got Warren Buffett's Berkshire Hathaway, which sells part of Delta and Southwest Airlines. So they sold 13 million shares of Delta and 2.3 million of Southwest. So that equates to $314 million worth of Delta and $74 million worth of Southwest. And there are various different speculative theories as to why Warren did this, but as we can see here, Berkshire previously owned about 11.1% of Delta stock and 10.4% of Southwest. Now in the States, if you own more than 10% of a certain stock, you're then considered an insider, and then when you go to purchase or sell a stock, you then have to report that to the SEC and it becomes public knowledge. So I think Warren didn't actually want that. And the reason he actually became an insider, so with a position of more than 10%, is because of the share repurchases of both Delta and Southwest, obviously then increasing current shareholders' stake in the business. So it looks to be that he just didn't want his kind of position to be in the limelight of the public, because there is something called the Buffett effect. So whenever Warren Buffett goes to either sell or buy a stock, thousands, if not millions of other people then copy him and do the same thing, which then causes a market effect. And say that he goes to sell the stock, the share price would then tank or fall immediately, and vice versa. So I think he's kind of aware of that and didn't want that for both of those stocks. Obviously others have just argued that it's because the industry is not very profitable. Now airlines are notoriously bad in terms of net profit margins, because most airlines compete purely based on price, and so Delta, as it says down here, projected on Friday that its second quarter revenue would fall 90%, with most planes being forced to stay on the ground. So I think some people were speculating that that was the reason that he sold his stock, but personally I think he's a longer term investor, and I can't see that being the main reason he would do it. I think it is actually because he doesn't want more than 10% of the business and to be considered an insider trader. Now, staying on the airline theme but moving back to the UK, we're going to look at EasyJet, and Stelios, who is the founder and biggest shareholder, has threatened to sue EasyJet bosses, so those on the board, as Airbus row takes off. Now, Airbus are the supplier of planes to EasyJet, and essentially, so Stelios is angry that they can't cancel an order from Airbus, and that's going to drain EasyJet's cash resources. And with all of pretty much every single airline's planes being grounded currently, there's no way of them making any revenue. So cash is king in this particular circumstance. So EasyJet's founder and biggest investor has threatened to sue the airline's bosses personally as a row deepens over a £4.5 billion order of Airbus planes. And essentially, EasyJet secured a £600 million emergency loan from the Treasury's coronavirus scheme, and borrowed a further £400 million from creditors, so in total £1 billion. But the airline's already burnt through £300 million over the last 3 weeks, and £170 million of that was due to funding a dividend. So all in all, the airline industry is not looking too appealing right now, with all that's going on. So I would watch out for that if you are considering investing in any airline companies. Now, another story that I want to talk about is Bill Ackman, who is a billionaire hedge fund manager, and he's now talking about feeling optimistic about a coronavirus recovery weeks after saying hell is coming. So essentially, he went on to CNBC and said that he was scared for his own father's health, for the health of the elderly and the vulnerable, and he kind of implied, if not implicitly, that we were going to see a financial crash similar to 2008, or at least like the repercussions from that, and potentially worse, maybe even as bad as the Great Depression. So he was really, really pessimistic about the United States market, and now he's saying that he's beginning to feel optimistic. So when he gave his interview saying hell is coming to CNBC, he actually had a short position on the United States market. So he was betting against the United States, and made billions doing so from a position of 20-something million. So he turned 20-something million into a few, if not several, $billion from his short position. And a lot of people have got not a bad feeling so much, but generally kind of like a sense of caution around Bill Ackman now, because it seems to me that he said some of the things he said potentially because he had a short position on the American market. And I think now for him to say he's beginning to get optimistic about a coronavirus recovery, just kind of, it throws a bit of caution to the wind for me. So I'm personally a little bit skeptical as to him potentially having some motives behind saying this, or something similar to that. Generally, looking at European markets quickly, they seem to have recovered quite nicely. So the FTSE 100 is up 2.72% today. The CAC 40, so France, is up 2.7%, which is nice, and the DAX is up 3.63%. And I think if we scroll up here in the Telegraph, I read somewhere that they think that Germany is now in a bull market. Here we go. Which is interesting. Germany industrial production has recorded its first back-to-back gains since early 2019. Here we go. Germany enters bull market. So very interesting. So the DAX is up 20% from the recent low it reached on the 18th of March. So I think I'm going to leave it there. I will see you in the next episode. Peace.